It's the end of the day, the trading day on October 27th, 2010, and we're going to look at the S&P 500, what went on today, how does it relate short-term, mid-term, and long-term. And going to do this video just a little bit differently because to me this was a very interesting day, and I want to point out the chart that I was using. Unfortunately, in my business as a photographer, nothing was going on today. So I got all my estimates and bids out and everything, but now I'm just looking at the markets today. So anyway, this is from freechartvideos.com, using time-honored techniques to understand modern markets. And this is for educational purposes only. Do not use this as investment advice. Use your own due diligence and make decisions that are right for you. I am not a licensed professional. I'm just a guy that sat around all day today drawing lines on charts. And this is my working chart from today's action. And wow, just a lot of interesting stuff went on today. Lots of little trends set up, lots of things that behaved pretty much exactly as they should have. A few things that did not, but the big picture kept me kind of in the trade, kept me in my positions, and we'll back out from this a little bit. But well, I'll tell you what, let's back out right now because I want to show you what these two lines right here mean. Matter of fact, here I'm going to make this. Let's make it red so it stands out. I'm going to make this one red too. And I want you to see what, by the way, this one was broken out of at the end of the day today. If we back out to, I think, a 10-minute chart, you will see that the S&P had been in a descending channel marked by 1, 2, 3 tops that was tested at the end of the day today and broke out. And this channel took us back for a retest of the overall channel that we have been in for 5 or 6 weeks. So what happened today was critical because we were, facing a potential breakdown of this bottom channel, and had that happened today, then we would have to kind of rethink the path that the S&P is going to take on its way to what I believe is going to be 1240 to 1250 minimum. So let's go back in on let's see if everything works here on a 3-minute chart. Yeah. So there's that downward channel as you see it. And you could tell by looking at the futures this morning that the markets were going to open down. So that was no big surprise. And when it opened down, I thought, well, we're probably going to go down and test this line. By the way, this is exactly where this line was drawn. I did not move it. And you can see, let's go to 2 minutes, you get a little bit more detail. You can see that prices began to trade within a descending wedge, and I marked this wedge when we made this top and that top and this top. That kind of put me on the alert that we're setting up some kind of trend here. And then when we made this bottom and this bottom, I changed this. I think originally I had this. And that really would have made sense, except for sometimes those opening moves just get a little bit out of range. So I went back with what was a cleaner pattern. So what happens? I'm watching this develop. I see it break out, and I'm thinking, okay, well, I'm ready for to pull back and retest this top line, and we did. Then we went up and started a small channel coming down. Once we got about here, I had these channel lines drawn. When it broke out, I thought, oh, super, wow, we're out of the woods. And I was thinking, we'll come back, we'll back test this, and then we'll head up. But that was we didn't just back test this, we broke down back into that small channel and actually traded briefly underneath the long-term trend line. Now, only by what? Just about 1.3, 1.4. Did we break that? And so I wasn't that concerned. I said, let's see if we can regain this channel. So I drew this line, just kind of as reference. I said, well, there's the nearest top that makes a straight line, that has a straight line view. And I said, we've already made this top. I tell you, I'm going to feel pretty good about things if prices come back and break this line. If we can break this line right here, I think we're on an uptrend. And sure enough, we broke it, kind of back tested it. And I did the same thing with this line right here, broke it, back tested. And at this point, I said, wait a minute, that's kind of interesting. When we made this little top here, I said, this, and this, they kind of line up, don't they? So I said, well, let's draw that purple line there, and I'm going to make that purple because I think that may be significant, because that would make this kind of like a double bottom. So I thought, well, if we can break over this purple line, then I think we back test it, and for sure, at least for the day, we're out of the woods. And sure enough, we broke out, back tested, then had an explosive move up. After we made this touch, I said, well, that's cool. These three line up. So I drew this line. This line is the same thing. I just said that's a top that we made. I'm going to base it off the last high that we had, thinking if we break this line, then we just continue to be more bullish. We broke that line, back tested it, came back. Now, with just about 10 minutes left in the trading day, this long, not a long term, but when you're looking at a 2-minute chart, it seems like long term. But this that had defined the downward trend channel to the bottom of the larger channel, we broke over that at the end of the day today. So all of this to say, this is the kind of nuttiness that I go through when I'm charting in real time. You can see there's a little line here. Looking at this little pattern as a consolidation. Looking at this little pattern as a consolidation. So this is kind of what goes through my head as we go through the day. And tomorrow, I'm thinking we're going to back test something. I don't think tomorrow's going to go straight up. I think for sure we're going to back test this line. And if this holds well, and let's say maybe we even gap up tomorrow, and then we come back and back test 1181 or maybe 1180 a little bit later in the day, because this is a descending line. That shouldn't surprise anybody. So anyway, that's the S&P. And let's back out just one more time to take a look at the big picture. And here's the 4-hour chart. The big picture is this: inverse head and shoulders, breakout, pullback, measuring from the neckline to the bottom of the head. We get a target that's about 1245, 1250, depending upon whether you use this shadow of this candle or you go with the real bodies. So anyway, 1245, let's call it. And this channel has been operating exceptionally well for what's going to be soon 2 months now. So if it keeps on working, I'm thinking maybe we just, possibly we stay in this channel all the way. I'm not really, it doesn't have to happen that way. I'm expecting resistance when we reach here, because this will be the line that was marked by the April 2010 highs of the current high of the year. And I'm thinking that's gonna create a little grief when we get there. How much, I don't know. Will it take it out of the channel? It's so close to the target. I wouldn't think it would, but I'm expecting this to put up a fight. Anyway, good trading to you, and please, when you get a chance, go check out freechartvideos.com. We're trying to keep it free, and the only way we can do that is by more and more traffic. So if you've got buddies and friends who trade and you think this is something that they might be interested in, please turn them onto the site. And if you want to have a quick link to just the S&P chart, you can go to sp500chart.com. Take care and good trading.